There is no place to run and there's no place to hide. Every market under the sun is getting bludgeoned today. You want to be in the safety of gold? That's not working out too well. Crypto getting destroyed, equities wrecked. We're going to be talking about all of that and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, hit the like button. If you haven't yet, subscribe to our channel. Nothing Kevin or I say is financial advice. Please do your own research before making any sort of financial decisions. Kevin, we got a jobs number today. Was not great. Wasn't as bad as original thoughts. Job revisions down about 85,000 from what I saw. The markets are looking real shitty right now. Crypto selling off like crazy. We're seeing ETH right around 2,200, Bitcoin 53.5K. Equities not doing a whole lot better. Down almost 500 points on the NASDAQ. Nvidia down 4%. Google down 3.5%. Tesla down 6 3/4. Netflix down 2.5%. Coinbase, of course, Coinbase is dumping. I mean, and then we look at gold even like, oh, gold should be good. We should be safe there. Nope. That's even, below 2,500 again, seeing some movement down in that one. So it is ugly across the board. It appears that cash is king at the moment. Who would have thought after Warren Buffett established his largest cash holdings in the history of Berkshire Hathaway that maybe it was a good idea to have some cash on hand? I don't know. Maybe who could have told you that? But that's enough of me blabbering on. How are you feeling about the markets today?
I'll tell you who I'm going to gloat here. I'll tell you who's been saying cash has been king for the longest. You and I. We said that if you don't know again, nothing's financial advice. We're not financial advisors. A couple of guys, you guys know the fucking drill. We've always said that, having cash on hand is important in a market, not just because you can buy dips, but also because if the market's going to go south, at least you're in some type of stable currency that you could at least maintain wealth for a period of time, right? That's why we said money market funds or some of these treasuries. There's still ways where you can use your cash to utilize and, remain solvent in a market like this, because you try using leverage to long things, leverage to short things. Yeah, I mean, look at what's been happening to start the month of September. Everyone was bullish going into September, and now everyone really doesn't necessarily know what's happening. Some people are calling for a correction, meaning we're going to get a bounce higher. Hasn't happened yet. This is a very interesting market where we are right now. I'm very excited to see what happens over the weekend because there's a lot of things that could potentially make this even worse. I'm always looking out for the worst possible scenario that could play out in the markets and then letting you guys know exactly how it would break down pretty much. But right now, this is a seller's market. I believe that the top of the market is in. I think that the rallies are going to become shorter and shorter, short-lived rallies, essentially what I'm trying to fucking say. I was trying to find a way to make it sound a little bit more professional, but pretty much you're not going to have these rallies that last days. I think it's going to be these rallies that last maybe a few hours, maybe the opening market, get everyone excited, dump it on the end of the day. And with this weekend, I think the weekends are for panics now. I don't think anyone's going to be going into the weekend feeling pretty good about crushing the VIX all day Friday. I think those days are done for a few weeks at least. I've been babbling on for a period of time. I don't even know what I'm talking about at this point.
Oh, it's all good. No one knows what the hell they're talking about. This market is an absolute shit show. And it's just, right now it's very, very PvP, right? Like the market is always a game. And that's what's so fun about it. Sometimes the game is a little more violent between participants. And that's kind of the place we're at right now. And when it comes to this game that is stock market, crypto, whatever, right? Like you can the smartest people can make a lot of moves and still win the game. The people who aren't quite as smart, don't have the tools, don't have the information, their best strategy is to do less and focus on not making a lot of mistakes. Okay. Right now, Over trading is a big mistake if you are not very, very good at it. So just something to keep in mind. Like, we talk about prices 3 times a week. We look at charts 3 times a week, but that doesn't mean, like, I'm self-aware enough to know that I am really bad at trading on short time frames. And so I don't even mess with it. Like, it's not even a game worth playing for me. So I think that's a really important thing to keep in mind right now is there's a lot of panic. Like, if you're on Twitter, if you're getting texts from people, once you're getting texts from your friends that, oh my God, I see crypto's down. Are you okay? I'm not saying you should buy at those moments. Like, maybe take a little bite at the apple. So right now, like, know the game you're playing and know your strategy for it, and like really stick to that even when it's tough, because this drawdown, however long it takes, however low it goes, we'll move past it, and eventually the prices will go up again. But the worst thing to do right now is like freak out and overdo it and overcorrect. So just want to keep that in mind.
Yeah, absolutely. I also think, with that being said, and this might be a bit hypocritical, this might be one of those things, and when you look back at it in hindsight, and it's like, I probably should have panicked, but I didn't have time to panic because things could just move so fast in a market, right? And sometimes when things move fast, you kind of just have to understand, like, make sure you have your portfolio in a place where you're okay if it does move fast in the wrong direction, but also, kind of have a bit of your portfolio allocated, like we said, to some cash, because that gives you options. And that, some people won't have those options because they didn't make any moves. And some people will have those options because they did make moves. This is the difference between riding Bitcoin down to whatever low it's going to go to, and then Warren Buffett having all this money on hand and probably going to make one of the best trades of his life when he gets the opportunity to. So just something that we should bring up. But to go back to some of the labor data stuff that we got, I don't necessarily think anyone believes this data anymore because we continue to get the revisions. I think of this last 7 revisions, last 7 months of data, 6 of them have been revised afterwards. So I think this is just kind of being the trend that we're going to continue to see. Japan kind of got saved today because we didn't get unemployment rate that was higher than expected, because that pretty much would have guaranteed we got 50 basis points cut. What is that, the 18th or something like that? And that would have meant that the dollar probably would have weakened considerably. It means that the yen would get a lot stronger, and then the sell-off that we got today would be a lot worse in Asia come Sunday night. But we didn't get that. I don't think that their problems are nothing that is out of the woods just yet. I think that we're going to continue to see these problems the more that these people in this market just continue to play this market, right? I don't think that there's any whales in this market at the time being. I think a lot of what we're seeing are, that distribution, or this might be the end of distribution. But this market, for some reason, is not catching a bid, and everyone's expecting there to be a bid. And there's nothing that's being caught for the past 300 points.
Yeah, when I'm looking at the probabilities on CME for the Fed rate decision in September, it actually moved toward a 25 cut instead of a 50. So right now we're about a 69% chance, nice, of 25 basis point cut, as opposed to only a 31% chance of 50. I wonder, is that a bullish signal? And I think the Fed's decision, I feel like this could be the first time where like the market is caught off guard.
Yeah,
and that
100%.
would be a really bad sign. Like, if the market's expecting 25, but then
50.
the Fed cuts 50 because they see that maybe things are getting worse below the surface than we're all seeing, that to me that would be very bad.
It's
So
catastrophic,
like,
completely.
if we get a surprise 50 in 12 days from now, oh boy.
Between you and me, that's what I think what'll probably happen.
I mean, I said we should have done 25 in July, but whatever. It's the Fed, I think, has realized how bad they stepped in it. Between the private sector, like, all the jobs numbers this week have been shit. All the job numbers for a while have been shit. Inflation is still, remaining somewhat sticky, and there's really no indication that that's going to get better anytime soon. So all this blood in the market, I don't know what the catalyst could be at this point to drive it in the other direction.
To the upside?
Yeah.
Yeah, good luck, guys. If you come up with an answer, drop it in the comments. I just don't. I mean, a crash and then massive QE. That's what I see as being what brings us to a bull market, but what comes first is what's more important, right? Um, Outside of that, I do want to talk about one thing that's been really interesting. And again, I know I bring up the yen all the time, but I think that it's also part of the reason why we continue to see this mass sell off. And it's because the US markets pricing in rate cuts is impacting how, the Japanese markets are pricing in yen and equities. As rate cuts come in, the dollar gets weaker and then the yen gets stronger. I talked about this last night. We got a double tap of this trend line down here at 141. They are defending this like crazy. This is the level you want to watch. And the fact that we're getting, close pretty close to, what is this, 2 hours or so away. If this comes anywhere near, I mean, even where it is currently, comes Sunday night, the Monday Open in Asia, if this is anywhere near this trend line, you're going to see a lot of chaos within the Asian markets in Japan, especially. And what does that mean? That probably means that we're going to have a lot more problems in the US as well. The big trade I always talk about is tech. We look at tech across the board. And I mean, Nvidia's again down almost 3.75%. It lost this trend line right around here. Yes, it's oversold, but here's the thing, if it was oversold, it probably should have held the support right here at 105, and it didn't. I'm seeing tons of people saying, bears and bulls saying, there's going to be a balance. This is where these are the levels you want to buy at. Well, it's like, okay, but who are you buying from? I only see people selling. I see Jensen selling. I see, Berkshire Hathaway, what's the guy's name? Warren Buffett. Man, that's a sin right there. I forgot Warren Buffett's name. And then you're seeing I'm seeing tweets about Nancy Pelosi losing on some of her trades. It's like,
Oh
we
God.
don't know if she sold or not, right? We're
Yeah.
probably gonna find out after the fact. Avgo is going down, Nvidia, all those trades have gone sideways. If she would have held, do we know? We don't. We really don't.
She's too
So I
good.
think
Too good to have been holding at the top here when all this is moving.
she
Like
she's too good of a trader for us to speculate that she fucked up here. I don't think she did. And again, those filings don't have to come out the next day. We just sometimes are able to track them, like Jensen Huang selling 26 million every chance he gets, right? So that's kind of where I stand with Asia and the tech trade right now. Obviously, when we look at the S&P, I want to keep this episode fairly short today. We fill this gap that's right here in the S&P, and yeah, there's plenty of room to the upside with the stochastic RSI completely oversold at this point. The thing that's interesting to me though is that we crash through the 50 moving average. We have some support here at 53.82, but after that, we're looking probably at the 200 moving average on the daily. And I wouldn't be surprised if the carry trade continues to unwind and it's problematic next week. I think that's very possible that we could be under 5,000 very soon, 5,000 in the S&P. And then if we look at where we currently are from the height of, August to where we are currently, it's 4.13%. So a lot of people crying about a 4.13% drop in the market. That's not even necessarily a major correction at this point. Even to the 200, that's 8.66%. Sure, that's a bigger move. And then right around here is about 11.61%. And here's the thing where I think a lot of people are going to get caught off guard. And we've talked about this in the past. They are looking for a correction. They're looking for a place where it's going to bottom out. I continue to say the way this trade was designed, the yen carry trade, it is a crash. It is not a correction. It's going to crash through levels. You're not going to see anyone be able to bid this because the way that the machines are positioned, once they get under a certain level, they're going to keep selling until they get to the next level. And if it looks like it's worse and there's a route and a fire sale and we're short on liquidity and capital and not capital, collateral, then it's just going to continue to get worse and worse. And you're going to try and see people maybe scalp some of these bounces, but they're not going to be anything considerable, right? We're not going to see the run up that we've seen from April of 2024 to July of 2024 in this, pretty much 3 month route, 3 month stock market rally that let us up 14%. I think it's more so you get one really good day, and then next thing you know, it's double the amount down the next day. That's kind of the way that we expected it. That's if this is a major crash that is upon us. As of right now, I won't say that it is, but it's starting to smell like one. I will say that.
Stinks is what it does. All right. What I don't want to like belabor the point that everything's just down right now, right?
I mean, we look at crypto and then we wrap it up. Everything's bad, guys. I'm sorry.
Like this is thank Christ the NFL started back up last night. I'm so happy to have something else to look at besides some other type of market that I can be involved in. The besides risk assets right now, because I'd rather be, this is just not. I want to be able to make money, put it into, DCA it in, and just wait for a year from now. Like I'm not in any desire to constantly be staring at the charts at this point.
Oh yeah, looking at the charts right now sucks. I texted you and House yesterday. Good. The bad news: world's going into a global recession. People probably lose a lot of their jobs. Good news: Linkin Park's coming out with a new album. That's where you have to appreciate the small things.
What do you think of? Have you seen any of the performance last night with the? I'm blanking
I
on
saw
your.
it live.
Oh, you saw it live. What'd you think?
I went to. Here's the thing. I'm all for it because again, when Linkin Park was big, I was still fairly young. Like I think the album that I really would have grown up with is Minutes to Midnight. So that's like the ass end of like the really really good Linkin Park, and then obviously I missed a lot of the good stuff, Hybrid Theory and Meteora. But now that I'm older, and obviously we're never gonna get Chester Bennington again. I think it's amazing that they're coming back and making music because Mike Shinoda, I love him, but I only love his work when he's with Linkin Park, right? So to not see the legacy of Linkin Park continue, I think it'd be a shame. And I think she's good. I think that if you listen to the recording, it's amazing, and it's going to be a cool sound for Linkin Park. But again, it's just a new era for the band. It can't replace the old.
Hybrid Theory came out when I was a freshman in high school. Like that makes me feel so old that you don't even remember it. Jesus.
Well, I remember it, but I just never listened to Linkin Park. Like never played in my house. 2007 when I was in like grade school. That's pretty much when I started. What was that? Transformers 1, the first one.
Oh, dude, Megan Fox. Well, anyway, all right, let's get this back on. We took you know what? I'm gonna be honest with everybody who watches this show regularly, which I greatly appreciate. There are probably gonna be a lot of like tangents like that happen over the next coming months as the markets are really shitty. Like we're gonna need something to distract us from just the chaos. So if you like the pop culture references, drop it in the chat. Let us know. We're happy to dive into that too when the markets are on days like this. But I got another call here in a little bit. So let's hit the charts. Let's look at crypto. I'm going to throw up right now. You just go ahead and talk about that microphone pattern or megaphone pattern you're seeing there.
Yeah, I mean, it was a megaphone pattern 100%. I'm not going to belabor or, get into too much detail, but this is what we talked about. It's all about the levels. The one level we talked about was about 52,900. That was the level that we had over here. I mean, we're right there, guys. It's all about the levels. We're going to see if it bounces off of that. And here's the thing. Crypto can bounce over the weekend because obviously liquidity can come in by way of stable coins. Whether that's actual money, who knows? But we could see that, or we could just absolutely lose this going into, the market open on the weekly open on Sunday night. And we're probably looking somewhere around 46.9, that $45,000 level. So that's kind of what we're seeing. We were expecting 5 waves. As of right now, I'm seeing wave 1. This is like a weak wave 2. We're in the middle of a wave 3, whether this bottoms here or if it bottoms somewhere around here, get rejected at 53, 47. That might be the end of that move. Now, do I think that's the end of the move entirely? No, I think we are going to lose this megaphone pattern, and I think that takes us somewhere around this fair value gap that's here at 32,000. That's just kind of the way things work. Where that is from where we currently are, fuck, that's 40%, guys. I'm sorry to be the bearer of bad news, but that's just the way things are. If we lose all these levels, you're going to be at 40% down. Now, the interesting thing is that wipes out a lot of this move that we've had, and we have to kind of look at this type of market and make sense of what's happened. Obviously, there's been a lot of manipulation. You can even see it in the chart here that this is so unnatural how this market's traded on the daily compared to how it traded when we had a massive amount of liquidity within 2020 and 2021. There was actual money back here, and I think all the stablecoin BS that happened down on the obviously this fall and then the rise up, especially in this area right here in April 2023. It's going to be really interesting to see if we break market structure because we probably shouldn't go as low as 10K. We probably shouldn't go lower than 15. We probably shouldn't go lower than 15K at this level. But if this market ends up being a lot worse and we see that it's more liquid than it actually is, and, say the greater financial outlook for, collateral and liquidity in TradFi markets is really bad, there's a good chance that we're going way lower than that $32,000 level, possibly as low as 15 or even 10. Any lower than that, you're probably looking at a depression in financial markets. That's just what I'm seeing.
Like you didn't have to say that out loud.
Well, no one will. That's why I'll be the first one. Like, I don't. Do I want a depression? No, but do I understand that the value of having one is going to save a lot of people in the long term? I understand that that's a possibility. It's just you can't have hyperinflation running rampant within, I mean, let's put it this way: the past 2 years have sucked ass, and I wouldn't want to have that for the rest of my life. Argentina has had to deal with that for a period of time. Not something I would like to deal with here. Looking at this though, ETH very much so playing out like what we talked about. That's the ADC corrective pattern from the height in November 2021, with the low in May of 2022, height in March of 2024, right before a lot of the ETFs. And then now we're looking for the bottom. Right now, this looks like February of 2025. I think it's very possibly could bottom before that, or it could be kind of like a fast move, and then we kind of slowly bottom, and we kind of create this accumulation zone somewhere down here between 877 and 637. I think that there is going to be some very good opportunities to buy ETH down in those levels. And then we're going to probably have a really good rally because liquidity will be re-injected into the world economy by so many different measures. So that's something to keep an eye on. But across the board, other than that, alts are down, but they're not doing anything too crazy right now, given Bitcoin's major dump, right? Bitcoin's down 4.5%. Yes, sure, alts are down 4.5% too, but I would have expected them to be down a lot more. So if you're in alts and you haven't gotten out yet, or you're looking to buy, you're looking to do whatever, thank you, lucky stars, that Bitcoin dominance hasn't destroyed alts in the USD pairings. But if you were to look at something, say like ETH BTC, for the past few days, it's actually just been getting slaughtered because Bitcoin dominance is so high against, the alts. And now Bitcoin's starting to move. It's going to be very, very much, I think this is going to be telling as opposed to the USD pairings. USD pairings will probably catch up, and it's just going to be one massive wick to the downside when the liquidity does run out. And if we look at this over here, the thing that we were talking about, USDT dominance continues to rise, right? We're looking for this to probably put in top somewhere around 10.75%, which is about 69.13 nice percent move from where we currently are. So that's just to look at crypto. Do I think that it's going to get worse? Yes, but you don't need me to say that. I mean, look at total 3 alts are just continuing this downtrend. Could they go a lot lower? Yeah, especially if you lose, 464, one wick down there, and you lose that, then you're probably coming down to somewhere around 376 or so. So just some levels. I don't want to get too much in the alts because we haven't seen them move just quite yet.
Yeah, there's gonna be plenty of time to talk about that in the weeks and months ahead. We'll get CPI data next Wednesday, producer price data the following day, and then we're coming up close to the first rate cut, and maybe we see
panics around the corner. We could tell right now.
Panics around the corner, but I'm wondering how much of that is already if that is already being priced in. Now, that's not to say that you should be going long on anything, but are we starting to see, with how widely it's understood that corrections happen after the Fed cuts rates, are people starting to front run that now? And that's what's going to be interesting for me, to watch once the Fed does cut. If people already front ran that, are we going to really see it eat shit? I mean, there's some other really bad indicators too. I saw that Constellation Brands, who distributors who have a big footprint in the alcohol industry, are seeing a huge decrease in wine and liquor sales. Vegas saw a decrease in the amount of money that was lost in casinos year over year from July. So there's a lot of indications that people are tightening up, and maybe that'll lead to, inflation going down. People have to get competitive with prices again. Maybe that'll be a positive thing in the mid to long term, but short term, it's probably going to be problematic for you.
Let me ask you this. I think something's around the corner to break, right? I think that something big in the financial system that's going to spark a major sell-off is literally right around the corner. My personal opinion is banks. And 2 banks I'm looking at right now are obviously Charles Schwab and Bank of America. And I think it's going to be a larger bank that sees problems as opposed to the narrative that we continue to be told that it's the smaller regional banks. I think those will also go, but I think it's a larger bank that's probably in more trouble than we are privy to that knowledge. But I was wondering, what do you think is going to be the thing that's going to break first?
I mean, real estate looks really bad right now.
It's a good call, too.
Commercial real estate looks really bad. I don't think residential is as much of an issue because, like, I think I saw a stat that like 75% of mortgages right now are sub like 4 or 5%. Obviously, the 4 or 5 is a big differentiator there, but I think people from that standpoint it won't be as bad. It could like commercial could just absolutely nuke a lot of these smaller banks if CRE like these buildings are selling. We've been talking about it for months of like selling for pennies on the dollar. So yeah, I think commercial real estate looks like a decent one, and the carry trade unwinding again and people being over leveraged. Like I guess the most likely thing to break is whatever people got really greedy and stupid about.
Leveraged into,
yeah, because we know that even after the 08 crisis and the bubble, the .com bubble in 2000, like no matter how many times you show people that playing with leverage is stupid, people get greedy and they still want to play with leverage. So I think whatever sector is the most over leveraged, that's going to break, and that's just going to be a cascading effect.
I completely agree.
You can always bet on people being stupid. Okay, that's one of the safest bets in mankind.
Yeah.
All right, that's going to wrap it up for today. We'll be back on Monday. See what's going on over the weekend, how the week starts out. We appreciate those of you who joined us today. If you haven't yet, subscribe to the channel if this is your first time here. If you haven't subscribed and you've been here before, what are we doing? Like, let us know. Have a great weekend, everybody. Enjoy some football if that's your that's your thing. It certainly is mine. And we hope you have a safe weekend, and we'll see you on Monday.
Stay safe. Take care.